Hello, this is your Interactive Accountant's News Brief. Good morning. As 2026 gets underway, many business owners are asking the same question. Do I need to take action under the Corporate Transparency Act this year? The answer for now is mostly no, but the full story is more nuanced, and ignoring it entirely could create problems later. Here is what business owners need to know about the Corporate Transparency Act, often called the CTA, and how it may affect them in 2026. The Corporate Transparency Act is a federal law designed to combat illicit finance, including money laundering and fraud. It does this by requiring certain companies to report beneficial ownership information, known as BOI, to the Financial Crimes Enforcement Network, or FinCEN. This information includes the names, dates of birth, addresses, and government identification numbers of individuals who own or control a company. The goal is to prevent bad actors from hiding behind anonymous shell companies. One of the biggest questions surrounding the CTA has been whether it is even constitutional. That question was largely settled late last year. In late 2025, a federal appeals court upheld the constitutionality of the Corporate Transparency Act, rejecting arguments that Congress exceeded its authority. That decision confirmed the law itself is valid. However, that does not mean every business must file a BOI report right now. Under current FinCEN guidance, most U.S. domestic businesses do not need to file a BOI report in 2026. FinCEN's interim rule currently exempts most domestic entities from reporting and states that penalties will not be enforced under the current framework. At this time, reporting requirements are largely limited to certain foreign entities operating in the United States. For many business owners, this has created confusion, especially after months of shifting deadlines and legal challenges. But experts caution this pause should not be mistaken for a permanent exemption. The current exemption for domestic businesses is temporary. Future rulemaking, additional court decisions, or legislative changes could quickly expand reporting requirements. If BOI reporting returns, affected businesses would likely need to provide detailed ownership information and update it when ownership or control changes. Failure to comply once enforcement resumes could result in civil fines or even criminal penalties. So what should business owners do now? Even without an immediate filing requirement, experts recommend using 2026 as a preparation year. That starts with keeping ownership records organized, understanding who qualifies as a beneficial owner, and monitoring guidance from FinCEN and trusted accounting professionals. Taking these steps now can help avoid rushed filings, compliance errors, and unnecessary risk later. Interactive accountants will continue to track developments surrounding the Corporate Transparency Act and provide clear, practical guidance for business owners. While the CTA may not require immediate action for most U.S. businesses, staying informed is key in a regulatory environment that remains in motion. For more details, business owners can read the full article from Interactive Accountants on how the Corporate Transparency Act could affect their business in 2026. We will continue to follow updates on this story as new guidance or rule changes emerge. This has been your Interactive Accountants News Brief. Thanks for watching. For more information, reach out to us online, on social media, or just give us a call. We look forward to hearing from you.